Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you throughout the day from Philadelphia at Nasdaq and Villanova Business School's ETF Synapse. Joining me for our first segment to kick off coverage, we have Shelly Antoniewicz. She is the Senior Director with Investment Company Institute. We are going to focus on the proposed SEC rule for ETFs. Thank you so much for joining us here today. Now, what should the industry be focusing on when it comes to the SEC's proposal for ETFs?
Well, first I'd just like to say that ICI was very pleased that the SEC did propose a rule. We really think this rule is going to modernize and streamline the regulatory framework for ETFs. We think the rule is going to, benefit ETFs and their investors. It's going to lower barriers to entry. It's going to facilitate innovation, competition. It's going to level the playing field for all ETFs in the industry. And we think that investors are now going to better understand sort of the all-in costs of owning ETFs.
Now, what about custom baskets? Why is it important?
Custom baskets was a big issue for the current ETFs that are in the landscape. We felt that's where the playing field was the most unlevel. We were very pleased, the industry was very pleased to see that the SEC did propose custom baskets for all ETFs in the industry. That said, we wanted to see if we could use research, do some empirical research to sort of support this decision for the SEC. So what we did was we went out and we did a special survey. We collected data on over 300 bond ETFs, where we think custom baskets is the most important. And we wanted to look at the degree of flexibility that ETFs had. So we did empirical analysis testing whether bond ETFs that had full custom basket flexibility did indeed provide significant benefits to investors versus those that didn't have any flexibility.
Right. So now the SEC's proposal on ETF pricing disclosures, that also got a lot of attention as well.
It did, and that was the bid-ask disclosure. And the bid-ask disclosure, one area that we provided some comments on and felt that the SEC could improve the proposal was in the area of, rather than providing a complicated numeric, all this very detailed numeric information to retail investors, much more of a narrative disclosure. We suggested narrative disclosure that was just talking to a regular person about what is a bid-ask spread first, how does it impact when you trade, trade how frequently you trade, and then how that impacts your end return. And we thought that would be much more helpful to investors than a lot of detailed numerical information that they might have a hard time understanding.
Well, to wrap up here, the point of today's conference is to focus on ETF academia and research. There's so much out there as the ETF market continues to grow and the regulators are shining a spotlight on this. How do you determine what's a good piece or a bad piece of research?
I follow three sort of guidelines when I read a research piece. One is data quality. That I usually go with the GIGO rule, which is garbage in, garbage out. So the cleaner the data set, the cleaner the data match up with what you're saying they're supposed to be, the more credible the results. Second is going to be assumptions. In any hypothesis or theory that you're going to test with data, you have to make some assumptions. The closer those assumptions line up with reality, the more credible the results.
Right.
And the last thing is estimation techniques, which gets highly, highly technical. But estimation technique is important because if you use an inappropriate technique, results you thought you found really aren't there.
Right.
So it is important. I will say just, to close up that with the ETF industry at $3.7 trillion in assets and growing, we're going to see a lot more research coming out in this area. It's a great thing. ICI will be putting out more pieces as well as others.
All right. Well, thank you so much, Shelly, for joining us at Synapse, and thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets